actually is. You know that Treasury Regulation 1.501, C3-1D3 permits advocacy inside educational programming only when the material presents a full and fair exposition of the facts. You know the methodology test, the four-factor procedure the IRS itself wrote in 1986 to decide whether content is genuinely educational. Now it is time to learn how to run that test yourself on any C3 in America tonight from your kitchen table in 5 minutes. The tools you need are free. 2 public systems. The IRS Tax-Exempt Organization Search. apps.irs.gov/app/EOS. And the ProPublica Nonprofit Explorer, projects.propublica.org/nonprofits. Every registered American C3 appears on both. Every 990 they have ever filed is there, searchable by name. When you pull a 990, you are looking for 3 sections. Part 1, Line 1, the mission statement. Part 3, Program Service Accomplishments, and Schedule O, the supplemental information. Those 3 sections, read against each other, tell you whether an organization classified as educational is actually teaching or is running cover. Before you pull anything, memorize the test. 4 factors, all of them from Revenue Procedure 86-43, the IRS's own procedure for reviewing educational classification. Factor 1. Are viewpoints presented as conclusions without meaningful factual support? Factor 2. Are facts distorted or selectively omitted? Factor 3. Are emotional appeals substituted for reasoned arguments? Factor 4. Is the delivery calibrated to permit an informed, independent judgment? If the answer to any of factors 1 through 3 is yes, or factor 4 is no, the content does not pass the methodology test. That is not your opinion. That is the IRS's own standard, from its own published procedure. Now the audit itself, 5 steps, 5 minutes. Step 1. Confirm the classification. Go to the IRS Tax-Exempt Organization Search. Type in the organization's name or its EIN. The return tells you 4 things: the exempt purpose category, educational, charitable, religious, scientific, the determination letter date, the public charity status, 509, A1, A2, or A3, and whether status has ever been revoked. Write down the exempt purpose. If it includes educational, you are in the right place. Move on. Step 2. Read Part 3. Go to ProPublica Nonprofit Explorer. Pull the most recent publicly filed 990. Open the PDF. Navigate to Part 3, Statement of Program Service Accomplishments. It is on page 2 of the return. Part 3 has 4 lines, 4A, 4B, 4C, 4D, where the organization describes its 3 largest program services in narrative form. Read each description. Then go back to page 1, line 1, and read the mission statement. Compare them. The mission statement is what the organization told the IRS it would do. Part 3 is what it actually did. When the mission is broad and abstract, to educate the public about, and Part 3 is specific, partisan-coded, or campaign-adjacent, you have found your first signal. Step 3. Read Schedule O. Schedule O is attached to Form 990. It is the open text field where the organization must explain any yes or no question on the main return that requires clarification. Read every page. You are looking for 3 things. First, language describing political activity, lobbying, or advocacy, and the organization's justification for why it is educational. Second, references to affiliated entities, successor organizations, or fiscal-sponsored projects. Third, any description of how content is developed, peer-reviewed, or balanced for methodology. The last one is the tell. A genuine educational organization usually describes its methodology somewhere: editorial boards, peer review, accreditation, curriculum standards. If Schedule O is silent on how the content is developed, that silence is a signal. Step 4. Walk Schedule 1. Schedule 1 lists grants the organization made to other organizations above the reporting threshold. If the C3 is a grant maker, walk the list. Ask one question on every grantee. Is this an accredited educational institution? A university, a community college, a K through 12 district, a peer-reviewed research institute, a library, a museum? If yes, that is genuine educational grant-making. If the grantee is an advocacy organization, an affiliated C4, a media production company, or a fiscal-sponsored project, that is not educational grant-making. That is the parent classification being stretched to cover downstream political content. Count the two categories. If the majority of Schedule I dollars go to the second category, write that number down. Step 5. Apply the methodology test. Go to the organization's website, its YouTube channel, its most recent annual report. Pick one piece of content, a video lesson, a curriculum module, a published report, a conference presentation. Watch it, read it, then apply the 4 factors. Factor 1. Are viewpoints presented as conclusions without meaningful factual support? Factor 2. Are facts distorted or selectively omitted? Factor 3. Are emotional appeals substituted for reasoned arguments? Factor 4. Is the delivery calibrated to permit an informed, independent judgment? Count the failures. If 2 or more factors fail on the content you sampled, note that. You have now applied the IRS's own procedure to the organization's own published programming. Add up your signals, 1 point each. 1. Broad mission with a narrow partisan-coded Part 3 program. 2. Umbrella parent structure with multiple named subprojects. 3. Schedule 1 grants that flow mostly to advocacy rather than accredited educational institutions. 4. Sampled content that fails 2 or more methodology test factors. 5. Schedule O silent on methodology and perspective balance. 0 or 1. Routine educational nonprofit. 2 or 3. Worth a closer look. 4 or 5. Likely educational classification abuse. The score is not a verdict. It is a structural map, one that the IRS itself has the authority to draw and, in most cases, has not. Now your assignment. Pick one. Option A. The classroom walk. Identify any C3 whose materials have been adopted by a state Department of Education for K through 12 classroom use, in any state, on either side of the political spectrum. Run the 5-step audit. Apply the methodology test to 3 specific pieces of approved content. Calculate the score. Report what you find. Option B. The fiscal sponsor walk. Identify a large fiscal sponsor C3. New Venture Fund, Hopewell Fund, Windward Fund, Tides Foundation, Donors Trust, State Policy Network. Pull the most recent 990. Identify 3 named subprojects inside the umbrella. Ask for each subproject whether it would, on its own, qualify for educational classification. Report what you find. Option C. The video curriculum walk. Identify any C3 educational organization that produces video content. PragerU, Heritage Foundation, Media Matters, Center for American Progress, Brookings, Hoover. On either side of the aisle, apply the methodology test to 3 of its videos. Calculate the score, report what you find, honestly in both directions. Option D. The methodology letter. If your audit returns a score of 4 or 5, draft a letter to the IRS using Form 13909, the tax-exempt organization complaint, or to the State Attorney General where the organization is registered, or to your congressional representative on the House Ways and Means Subcommittee on Oversight. Do not allege. Summarize the gap. The mission statement, the Part 3 program, the Schedule 1 flows, the methodology test results. Ask whether the classification warrants review. Cite Revenue Procedure 86-43 by name. That is the procedure. That is the test. It is already on the IRS's books. Run the audit. Post what you find in the comments. Tag us. Every citizen who reads one curriculum and applies one test makes the floor one step more visible. Shadow Patriots. Project Milk Carton. Reach one. Teach one.
signed a permission slip on Wednesday morning, 7:45, the coffee going cold. I read the top line, I read the trip, I read the bus. I didn't read the line that said who owned the gold. The word on the letterhead was a word I thought I knew. The word on the letterhead was educational. And I believe the word because I believe the letterhead. And I believe the letterhead because the word was there. They called it a lesson, they called it a book, they called it a curriculum. I took what I took, a permission slip. Is not a lesson, a permission slip. Is not a plan, you sign the form at the kitchen table. You don't sign the man. There's a room inside a room inside a room. All the rooms are filed under one door. One teacher at the front, 12 doors behind her. All the doors lead back to the same floor. Who wrote the lesson? Nobody knows. Who funds the teacher? Nobody sees. Who gets the tax break you wrote a check for? Who gets the permission that flowed through me? They called it a lesson, they called it a book, they called it a curriculum. I took what I took, a permission slip. Is not a lesson, a permission slip. Is not a plan, you sign the form at the kitchen table. You don't sign the man. One letter tells the children on the right, one letter tells the children on the left. Same envelope, same return address, same folder in the same file cabinet. Different videos, different holy words, different names on the different boards. Same permission slip, same trust, same classroom door held just ajar. There is a test. There is a test. Nobody takes it, a test they wrote in 1986. 4 questions, a teacher could answer them. A parent could answer them in less than 5 minutes. Is it a viewpoint dressed up as a fact? Is it a fact they cut to fit the frame? Is it a feeling standing in for a reason? Can the child walk out and think for herself? Can the child walk out and think for herself? A permission slip is not a lesson, a permission slip is not a plan, you sign the form at the kitchen table. You don't sign the man. You don't sign the man. Read the second page. Read the second page. Read the second page before you sign the man.
You just finished Module 9. You know how the personnel overlap move works. You know that the same 50 people, wearing 3 hats each, is the coordination architecture of a sector. You know that it is legal, it is visible, and it is the single most important pattern the tax code does not name. Now it is time to learn how to draw the diagram yourself. Any C3 in America, tonight, from your kitchen table, in 15 minutes. The tools you need are free. 2 public systems. The ProPublica Nonprofit Explorer, projects.propublica.org/nonprofits, and LinkedIn. The public-facing profile search, Every registered American C3 files a Form 990 every year. Every 990 is on ProPublica, searchable by name. You do not need an account. You do not need a subscription. Every document in this audit is public, permanent, and free. Before you pull anything, memorize the spine. 3 sections of Form 990, read in order, give you the personnel overlap picture. Part 7. Officers, Directors, Trustees, and Key Employees. The Personnel Census. Schedule L. Transactions with interested persons. The related party money. Schedule R. Related organizations. The organizational family tree. Part 7 gives you the people. Schedule L gives you the edges. Schedule R gives you the organizations. 1 document is a list. 3 documents are a diagram. Now the audit, 5 steps, 15 minutes. Step 1. Pull the 990. Go to projects.propublica.org/nonprofits. Search the organization by name. Click the most recent filing year. Open the full PDF. You are looking at a 30 to 80 page document. Scroll to page 2. That is where Part 7 begins. Step 2. Read Part 7. Part 7 lists every officer, director, and key employee above the compensation threshold. 6 columns. Name, title, average hours per week, compensation from the organization, compensation from related organizations, other compensation. Write down every name, write down the title, and flag any row that shows compensation from related organizations. That column is the hinge. It tells you the officer is paid by more than one entity in the family. That is the first signal. Step 3. Read Schedule L. Schedule L appears later in the 990. Look for the schedule list in the table of contents. Most 990s have it. Schedule L has 4 parts. Excess benefit transactions. Loans to or from interested persons. Grants to interested persons. And Part 4. Business transactions involving interested persons. Read Part 4 most carefully. If a director of the nonprofit also owns a consulting LLC, and the nonprofit paid that LLC, Part 4 is where the transaction is supposed to appear. Write down who, dollar amount, type of transaction, nature of the interest. Step 4. Read Schedule R. Schedule R is the organizational family tree. 2 parts matter most. Part 1 lists related tax-exempt organizations, other C3s, C4s, charitable trusts. Part 2 lists related organizations taxable as corporations, for-profit affiliates, LLCs. Write down every entity name, its EIN, and its exempt status code. You now have the organizations. You already have the people. 1 step to go. Step 5. Cross-reference the names on LinkedIn. Open a browser tab. For each name you wrote down in Part 7, search the name plus the organization on LinkedIn. Record every other organization the person lists as a current affiliation. Look for 5 things. Board seats at other C3s. Senior fellow or visiting scholar affiliations at think tanks. For-profit consulting LLCs where they are listed as principal or managing director. Government appointments, past or current, and political campaign roles from the last cycle. This is the edge list. You now have a diagram. Now score the overlap. 1 point each if the answer is yes. 1. 3 or more Part 7 names show compensation from related organizations. 2. Schedule R lists 3 or more related tax-exempt organizations or taxable affiliates. 3. At least 2 Part 7 names on LinkedIn list current board seats at 3 or more additional nonprofits. 4. Schedule L Part 4 shows business transactions with interested persons above $100,000. 5. The same law firm, consulting firm, or accounting firm appears as counsel or contractor across 3 or more of the related organizations. 0 or 1, normal nonprofit. Some overlap is expected. 2 or 3, worth a second look. 4 or 5, structural interlocking directorate. The score is not a verdict, it is a map. 5 red flag patterns. Any one alone is a prompt to look closer. 3 or more is a structure. 1. The same person appears as director on the C3 and is principal of an LLC listed on Schedule R. 2. The same law firm appears as registered agent for the C3, the C4, and the affiliated Delaware LLC. 3. Part 7 compensation from related organizations is listed, but Schedule R does not name those organizations. 4. Officer rosters across the organizational family share a critical mass of identical names year after year, not rotation, concentration. 5. Schedule L. Part 4 is blank, but Schedule R lists a for-profit affiliate whose owners are also directors. Now your assignment. Pick one. Option A. The Cluster Walk. Pick one umbrella fiscal sponsor from Module 5 or Module 8, New Venture Fund, Hopewell Fund, Windward Fund, Tides, Donors Trust, State Policy Network. Pull its most recent 990. Walk the 5 steps. Score the overlap. Do the same for 2 of its named sub-projects or affiliated entities. Compare the 3 Part 7 rosters. Report the edges. Option B. The Think Tank Walk. Pick one C3 think tank. AFPI. Heritage. Brookings. Center for American Progress. Hoover. Manhattan Institute. CAP. Any well-funded policy shop. Pull its 990. Walk the 5 steps. On LinkedIn, cross-reference the top 10 compensated individuals. Count the total number of outside board seats, senior fellow affiliations, and consulting LLC principal roles held by those 10 people. Report the density. Option C. The Sector Walk. Pick one policy sector: immigration, energy, election integrity, child welfare. Any issue area with multiple competing nonprofits. List the top 5 C3s active in the sector. Pull all 5 990s. Identify any officer, director, or key employee who appears on more than one roster. Report the shared names. Option D. The Interlock Letter. If any of the above audits returns a score of 4 or 5, draft a short letter. To the Charitable Registration Authority in the State of Principal Operations for the organization, and to the appropriate Congressional Oversight Subcommittee. Do not allege. Summarize the edges. The Part 7 overlap. The Schedule R family. The Schedule L transactions. Ask one question. Does this sector meet the working definition of independence that regulators currently rely on? Run the audit. Post what you find in the comments. Tag us. 50 people run 300 organizations. That is a hypothesis. The 5-step audit is the test. Every citizen who draws the diagram makes the network slightly more visible. Shadow Patriots. Project Milk Carton. Reach one. Teach one.
A note before we begin. Module 10 is built differently than the modules before it. The first 9 financial moves in this series have a clean editorial line. Here is the rule. Here is the exploit. Here is the audit. Module 10 does not. The 8th move, the redaction of donor names from Public Form 990 filings, is the only move in the 8-move architecture that exists for defensible constitutional reasons. A 63-year line of Supreme Court decisions, beginning with NAACP versus Alabama in 1958 and ending with the AFPF versus Bain-Ta ruling in 2021, has held that compelled public disclosure of associational ties chills First Amendment protected activity, and that the chill operates on every political alignment in American life, eventually when the wind shifts. The doctrine has protected civil rights organizers in Alabama in 1956. It has protected traditional marriage donors in Sacramento in 2008. And it has protected small business owners in conservative coded industries from 2013 through 2019. It will protect someone you care about the next time the wind shifts. That truth and the structural opacity argument that runs through this entire series, they are both true at the same time. The vault protects something real, and the vault, combined with the 7 moves stacked above it, produces an architecture that is defensible piece by piece and indefensible in combination. Naming this honestly is the editorial discipline of Module 10. You will encounter that doubleness across 4 pieces in this module. The broadcast you are about to watch reports the structural problem. The Shadow Patriot Citizen Action Card teaches the reform literacy. The Module 10 companion brief, The Case for the Vault, walks the constitutional history, and the Module 10 song captures the whole tension in a single line. Make the reason a shield, and the shield a fort. A shield protects, a fort excludes. The same structural element is both depending on how it is combined. Shadow Patriots maps. We do not choose. The vault is the cleanest case in the financial architecture where a serious citizen has to hold two true things at once. What follows is the broadcast version of the eighth move. Stay with us and stay with the doubleness as it lands. Good evening. You're watching Project Milk Carton. Tonight, the last of the 8 financial moves. The one the public is not allowed to see.
We call it the Vault. It is the donor identity schedule that every charity in America files, and that you, the public, are barred by law from reading.
This is financial move number 8 in our 8-move series. It is the closer. By the end of this broadcast, you'll know how the schedule was sealed, who sealed it, and why the citizens' move on this one is structurally different from the previous 7.
Let's get into it.
Every tax-exempt organization in the United States above a filing threshold files an annual information return called Form 990.
The 990 is a sworn document. It discloses revenue, expenses, officers, officer compensation, program activity, and related organizations. It is filed with the Internal Revenue Service, and it is, with specific exceptions, a public document.
Attached to the 990 are a series of schedules. Schedule A, Schedule C, Schedule F, Schedule L, Schedule R, and the one we are talking about tonight, Schedule B.
Schedule B is the schedule of contributors. For most filers, a contributor is reportable on Schedule B if they gave the organization $5,000 or more in the reporting year. For large public charities that use the 2% test, the threshold is whichever is greater, $5,000 or 2% of total support.
Each qualifying contributor appears on the schedule with their name, their address, the contribution amount, and whether the contribution was cash or property.
The schedule was created because the tax-exempt sector is underwritten by the public. Americans subsidize the operations of every tax-exempt organization in the country through the charitable deduction. Congress, in the Tax Reform Act of 1969, took the view that subsidy of that scale demanded a matching obligation of transparency about who was underwriting the nonprofit.
That was the intent. Schedule B was the accountability document, not a tax instrument, a public ledger instrument.
What it was not, from the start, was fully public.
The statute that governs public disclosure of the Form 990 is Section 6104 of the United States Code, Title 26.
Subsection B authorizes the Internal Revenue Service to make a tax-exempt organization's return available for public inspection. Subsection D requires the organization itself to make the return available to anyone who requests it.
But subsection D, paragraph 3, subparagraph A carves out a specific exception.
For 501c3 public charities, which are the vast majority of American charities, the name and address of any contributor shall not be made available for public inspection. The amount of the contribution stays on the public version. The contributor's name and address are redacted by the IRS before release.
That rule has been on the books, in substantially its current form, since the disclosure regime was built. The public has never, in the modern era, been able to read the unredacted donor list of any 501c3 public charity.
For decades, 3 partial backstops existed outside that public inspection rule.
First, non-C3 exempt organizations, social welfare organizations under C4, labor unions under C5, business leagues under C6, political organizations under 527. All of those had to file Schedule B with the IRS. The IRS held the information. The public didn't see it either, but the IRS had it and could use it in enforcement.
Second, state attorneys general. A small number, notably California and New York, required fundraising charities to file unredacted Schedule B with the state as part of state-level charity oversight.
Third, subpoena. In litigation or in congressional oversight, Schedule B was producible.
Each of those 3 backstops has been narrowed in the last 8 years.
In July of 2018, the IRS issued Revenue Procedure 2018-38. The procedure removed the Schedule B filing requirement for non-C3 exempt organizations. C4s, C5s, C6s, 527s. None of them had to file Schedule B with the IRS at all.
The rationale offered was administrative burden. The effect was that the IRS stopped collecting the donor information for the entities most commonly used for political advocacy work.
That procedure was challenged in federal armor. Bullock versus Internal Revenue Service, District of Montana, 2019. The court struck it down on procedural grounds because the IRS had not followed Administrative Procedure Act notice and comment rulemaking.
The IRS reissued the policy through the proper process in 2020. Treasury Decision 9898. The new regulation is in effect and has been since.
Then, in July of 2021, the Supreme Court decided Americans for Prosperity Foundation versus Bonta. 594 U.S. Reports, page 595. A 6-3 opinion written by Chief Justice Roberts.
The California Attorney General had been collecting unredacted Schedule B from fundraising charities as part of state-level compliance. The court held that the bulk collection violated the First Amendment right of free association.
The decision didn't forbid individualized Schedule B requests by state AGs, but it effectively ended the California and New York bulk collection programs. The pre-2021 state holdings were either purged, frozen, or legally compromised for disclosure purposes.
By the end of 2021, the three backstops had narrowed to this. The IRS has the information for 501c3 public charities. It no longer has it for C4s, C5s, and C6s. The state AG bulk collection programs are effectively gone. The public has never had access, and the constitutional framework has tilted against future bulk collection programs.
That is the vault. Before we go to the case study, step back and see where this move sits in the architecture.
We have walked 8 moves in this series.
Move 1. DAF stacking. The donor's name disappears into a donor-advised fund sponsor's aggregate account.
Move 2. Entity laddering. The legal path of the money is distributed across C3, C4, and 527 layers.
Move 3. Fiscal sponsorship. The destination nonprofit operates inside a larger entity's C3 wrapper.
Move 4. Foreign principal pass-through. The origin of the money can be foreign without triggering Foreign Agents Registration Act filing.
Move 5. Delaware LLC opacity. The ultimate owner of the instrument is protected by state corporate anonymity.
Move 6. Educational classification abuse. The activity being funded is classified as educational beyond the reach of political disclosure regimes.
Move 7. Personnel overlap coordination. The people running the nominally independent entities are the same 50 names, distributed across boards the regulators cannot see together.
Move 8. Tonight. Schedule B black hole. The one remaining document that would link money, mechanism, and name is redacted before publication.
Each move has its own defense. Each defense is reasonable in isolation. The structural problem is the combination, all 8 stacked. Case 8 takes us back to Module 3.
Elevate Hope, Inc., a 501c3 public charity registered in Florida, EIN 900806545. Its publicly filed Form 990 is on ProPublica Nonprofit Explorer and in the IRS tax-exempt organization search. Its stated mission involves community support and anti-trafficking work.
In its most recent publicly available filing, Elevate Hope reported total revenue of approximately $892,895. About 93.5% of that revenue came from contributions.
Its chief executive, Rena Spiruk, was compensated $184,691, a 45.8% year-over-year increase. The organization has been administratively dissolved by the Florida Secretary of State 3 times in 2013, 2019, and 2021, and reinstated each time.
Among the identified funding sources, PMC Financial Forensics under Investigation OP 2026-0009 traced a $60,000 contribution from DAF Giving 360, the Schwab Charitable Donor Advised Fund rebrand.
The grant appears as a line item on the DAF sponsor's Public 990 and as a contribution on the Elevate Hope side. Both sides are disclosed. The amount is disclosed. The direction of the money is disclosed.
What is not disclosed under the rules of Move 1 is which DAF Giving 360 account holder advised the grant.
The DAF mechanism anonymizes the original donor. That was move 1. The remaining question any serious investigator would ask is whether the $60,000 contribution triggered a Schedule B entry on Elevate Hope's 990. At $60,000, it well exceeded the $5,000 reporting threshold.
And if it did, whose name appears in the unredacted copy that went to the IRS?
On the publicly available 990, that question has no answer. The name is redacted by Section 6104, subsection D, paragraph 3, subparagraph A.
The public sees the amount. The public does not see the contributor.
And DAF Giving 360, as the DAF sponsor, would be listed on Schedule B as the grantor entity, not as the original donor. The DAF layer does not break on Schedule B. It persists.
That is where investigation OP 2026-0009 hit the statutory wall. Not because the investigators ran out of leads, because the leads themselves required access to a document the law does not permit the public to read. The trail ended at the IRS rule.
Case B is not a specific organization. It is a records access pattern that reproduces at every 501c3 in the country.
Consider the America First Policy Institute, AFPI, a 501c3 public charity. Its 990 is publicly available on ProPublica Nonprofit Explorer. Total revenue, officer compensation, program expenditures, related organization disclosures, all on the public return.
Its Schedule B, on the public version, shows contribution amounts. Donor names and addresses are redacted.
A reporter or researcher wanting to know AFPI's major donors by name has 3 public records pathways.
Pathway 1. A Freedom of Information. Act request to the IRS for the unredacted Schedule B.
It will be denied. The denial will cite Section 6104, subsection D, paragraph 3, subparagraph A, the statutory bar on disclosure of C3 public charity donor identities. The denial is not discretionary. It is mandatory under the statute. No administrative appeal succeeds on the merits because the denial is correct on the merits.
Pathway 2. A records request to a state attorney general.
Before 2021, a small number of state AGs collected Schedule B as part of state charity registration compliance and might have been subject to state-level FOIA. After Americans for Prosperity Foundation versus Bonta, the bulk collection programs were struck down. The pre-2021 holdings were purged, frozen, or legally disfavored for disclosure. A request today returns either a denial on legal grounds or a notice that the state no longer maintains a collection.
Pathway 3. A request to the nonprofit directly, to its own records custodian.
It returns a denial grounded in the same statutory framework. A C3 must make its 990 available for public inspection. It is not required to make its Schedule B donor list available, and in practice it does not.
That is the end of the public records pathway. The record exists. AFPI filed it. The IRS received it. The data is in a filing cabinet. 3 agencies hold some version of it. None is required to release it. After Bonta, the constitutional framework has tilted against even voluntary release.
The investigator's report writes itself. Donor identities redacted by IRS rule. State AG records unavailable post-Bonta. Organization declined to provide. The file closes. The same file closes identically for all 1.5 million C3 public charities registered in the United States.
The vault does not discriminate by politics.
On the political right, the Marble Freedom Trust, a 501c4 social welfare organization, reported to hold an endowment of approximately $1.6 billion, transferred in 2021 from Barisad, the sole donor. The initial transfer became public through investigative reporting by the New York Times and the Wall Street Journal, not through any public filing.
Going forward from that initial endowment, Marble Freedom Trust's donors fall under the post-2018 C4 regime. No Schedule B filing to the IRS. No public disclosure on the 990. The vault is effectively complete.
On the political left, the Arabella Advisors Cluster, New Venture Fund, 1630 Fund, Hopewell Fund, Windward Fund, North Fund, roughly $1.5 billion per year in aggregate.
The C3 entities in the cluster file Schedule B with the IRS. The IRS redacts the names before public release. The C4 entities, 1630 Fund's C4 sister, the North Fund, no longer file Schedule B with the IRS at all under the post-2018 regime.
Two networks, one explicitly right of center, one explicitly left of center, both operating inside the same vault.
This is not a both sides rhetorical equivalence. The numbers are different, the missions are different, the politics are different. What is identical is the legal architecture that shields the donor layer from public view.
Whatever journalism is done on these networks, and there has been substantial reporting on both, is done despite the vault, not with the aid of the schedule that was designed to answer the question.
The mechanism is the story, the party is not.
There is a plausible, defensible civil libertarian argument for the Schedule B redaction rule. We are going to state it fairly.
Donors to nonprofits that take controversial positions face retaliation, harassment, and in some historical cases, physical violence. The lineage starts with NAACP versus Alabama in 1958. The Supreme Court held that the state of Alabama could not compel disclosure of the NAACP's membership list because disclosure would chill First Amendment protected association.
That line, from NAACP versus Alabama, through Citizens United versus Schneiderman in 2018, through Americans for Prosperity Foundation versus Bonta in 2021, is consistent. Coerced disclosure of associational ties, where disclosure invites retaliation, is a First Amendment problem of serious magnitude.
This argument has force. It is not a cynical rationalization. The donor to a civil rights organization in 1958 Alabama was, in fact, in physical danger if their name was disclosed.
The vault was not built by villains. It was built, in substantial part, by a First Amendment concern with a serious pedigree.
What makes the current regime a structural problem is not the existence of the protection. It is the combination of Schedule B redaction with the 7 preceding moves.
A donor who wants anonymity can use a DAF. If that is not enough, they can layer a C4 above a C3. Fiscal sponsor, foreign pass-through, Delaware LLC, educational classification misuse, multiple interlocked entities. And at the final layer, the 990's own Schedule B is statutorily redacted.
Any one move is defensible. 8 moves stacked is something else. It is a systematic removal of every identifying signal at every layer of the money trail, applied simultaneously.
The result is not the protection of a civil rights donor in 1958 Alabama. The result is an architecture in which any contributor of any motive is rendered structurally indistinguishable from the NAACP donor.
The vault does not know the difference between them. That is its defining feature.
Every module in this series has ended with a citizen action segment.
Module 10 is different. Schedule B cannot be opened by a citizen. It cannot be opened by a reporter. It cannot be opened by a state attorney general in most jurisdictions after Bonta.
The only paths to an unredacted Schedule B for any given 501c3 are a federal grand jury subpoena, a congressional oversight request, an IRS enforcement proceeding, or the consent of the organization itself.
None of those is a retail tool for a citizen with a laptop.
So the citizen's move on Module 10 is structurally different from the moves on Modules 3 through 9. 4 things are available.
First, mechanism literacy. When a reporter writes, "The donors are not disclosed," the sentence is a statement of positive law, not of reporting failure. The rule is Section 6104, subsection D, paragraph 3, subparagraph A. The rule has a number. The number exists. Know the number.
Second, the public layers above the vault. Schedule B is the deepest layer. Every layer above it is still readable. Part 7, Schedule L, Schedule R, Schedule I, Schedule O, Form 990 itself. Modules 3 through 9 of this series train you to read the layers that are public. Those audits still work.
Third, the reform question. A transparency architecture that stops short of donor identity at the final layer is a policy choice. It was chosen by Congress, by the IRS, by the Supreme Court, with serious constitutional argument in support. It can also be narrowed.
Aggregate reporting, disclosure of donor totals by source category without individual names, would preserve associational privacy and close the accountability gap. A threshold-based rule, full disclosure for contributions above a very high dollar amount, redaction below, is another option. These are legislative questions. They are live. They are the reform conversation.
Fourth, the congressional and enforcement pathway. The one class of actor that can legally open the vault on a specific organization is the federal government itself.
Where a reporter, a state AG, or a citizen has mapped a suspicious pattern across the 7 public layers, the path forward is not a public records request. It is a referral to a congressional committee with oversight jurisdiction, or to the IRS Exempt Organizations Division, or to the Department of Justice in the appropriate circumstance.
The diagram is useful. The referral is the move.
The vault does not open for citizens. Citizens open the question of whether the vault should remain closed. We close Module 10 the same way we will close Part 2 of this series.
8 moves, 1 architecture.
DAF stacking hid the donor. Entity laddering hid the legal path. Fiscal sponsorship hid the destination. Foreign principal pass-through hid the origin. Delaware LLC opacity hid the owner. Educational classification hid the purpose. Personnel overlap hid the coordination.
And tonight, Schedule B hid the name.
Each move has its own defense. Each defense is reasonable in isolation. In combination, they produce an architecture in which a donor, a vehicle, a destination, a mechanism, a classification, and a set of ultimate operators can all be made structurally invisible to the public, to the press, and to every regulator that would need to act.
Simultaneously, at scale, using nothing but the existing legal framework.
That is the game. You have now seen the 8 moves.
Next week, Part 2 closes and Part 3 opens. The financial architecture is not the only layer. A parallel information operations architecture runs alongside it. Module 11, Competing Narratives. 2 actors, no contact, opposite politics, identical narrative, inside the same 4-hour window. The effect of coordination without coordination.
The game was never only about money, but money is where it started. And you have now walked the full 8 moves.
For Project Milk Carton, I'm Sarah.
And I'm Brian. Good night. Good evening. I'm Brian Walker from the PMC News Desk.
And I'm Sarah Reyes.
Tonight's broadcast opens Part 3 of the Shadow Patriots series, The Information Moves, Module 11. The story behind tonight's title is one of the cleanest single examples of cross-spectrum narrative convergence anyone has yet assembled. We will walk it carefully because the mechanism is more important than the names involved, and because we deliberately are not going to use the names involved.
Module 10 closed Part 2 of this series last week. We walked the 8th and final move in the financial architecture, the redaction of donor names from Public Form 990 filings, what is called the Schedule B vault. We made the constitutional case for why that vault exists. 63 years of First Amendment doctrine, beginning with NAACP versus Alabama in 1958, ending with AFPF versus Bon-Ta in 2021. The vault protects citizens from compelled disclosure by the government. Disclosure that, when it has happened historically, exposed citizens to documented harassment, retaliation, and economic reprisal.
Module 11 opens against that frame, and it opens with a sentence the previous 10 modules have been building toward.
The vault was built over 63 years of case law to protect citizens from compelled disclosure by the government. The information operations architecture exists to inflict the same harm the Constitution forbids, via private actors the Constitution does not reach.
The First Amendment restrains the state. It does not restrain private actors. It does not restrain the algorithm. It does not restrain the cluster. It does not restrain the coordinated pile-on, the doxing campaign, or the cross-spectrum amplification that takes a citizen's name, a citizen's relationships, and a citizen's reputation, and makes those load-bearing facts in the citizen's next employer's HR file, the citizen's next bank's underwriting decision, and the citizen's next neighbor's mental model of who they are.
What the Constitution forbids the state from doing, exposing relationships in a way that subjects a citizen to harassment, is now, in 2026, performed daily by private actors using infrastructure the 1958 court could not have imagined. The vault remains. The doctrine remains. The harm the doctrine was designed to prevent is being inflicted anyway, by a different actor, through a different channel, with no judicial remedy.
March 2026 produced the clearest single example of the mechanism anyone has yet assembled. We are about to describe that event without using the names of the accounts involved. The mechanism is the story, the names are not. We are going to ask you as you watch to listen for the structure rather than reach for the identities. By the end of the broadcast, you will see why.
It was a Wednesday afternoon in late March 2026.
A 147,000 follower account, coded distinctly left of center across every available signal, published a post asserting that a specific public figure was the agent of a foreign hostile power. The post used 8 words to do it: a surname, a category noun, a specific allegation of foreign association, a frame.
That is what we will call the blue vector. Left-coded, 147,000 followers, posted first.
4 hours later,
A 1.8 million follower account, coded distinctly right of center across every available signal, published a post asserting the same thing about the same public figure, the same 8-word frame, the same surname, the same category noun, the same specific allegation of foreign association. Word for word, structurally, the 2 posts were the same.
that is the red vector, right-coded, 1.8 million followers, posted second, 4 hours after the first.
The 2 accounts had never communicated. They mute each other. Their bios make clear they regard one another as political enemies. There is no message between them. No shared editor, no common payroll, no phone log, no coordination in any sense any prosecutor or any congressional investigator could establish.
Within 48 hours, 17 additional accounts had picked up the 8-word frame. Some coded left, some right, some unclassifiable. Combined reach across the full 19 accounts. Approximately 4.7 million followers.
The named figure's reputation, in the kitchen table sense, what their employer thought, what their banker thought, what their neighbors thought, was meaningfully different on Friday than it had been on Wednesday morning. There had been no court ruling, there had been no investigation, there had been no evidence beyond the 8-word frame, repeated across a network of accounts that did not coordinate.
2 enemies, 1 narrative, 4 hours.
The temptation, when you encounter the event we just described, is to reach for the word collusion. Collusion is the cleanest available explanation. 2 accounts, same frame, same target. Surely they spoke. Surely there is a private message thread. Surely there is somebody paying both sides.
There is not. We have looked. The investigators we have spoken to have looked. The legal answer is that no coordination occurred, in any sense the regulatory framework currently uses to define coordination.
The correct word is convergence.
Collusion implies a meeting. Convergence is what an algorithm produces from independent actors. The distinction is not rhetorical. It is the entire mechanism of this module.
A platform recommendation algorithm, the system that decides which post you see, which post the next reader sees, and which post the algorithm itself amplifies into the next tier of distribution, does 3 things continuously at a scale no human cluster has ever operated at.
First, it identifies which framings of a given target are producing the highest engagement metrics in real time. A post that gets shared, quote-tweeted, replied to, and retained on screen is a post the algorithm reads as valuable. A post that does not is not.
Second, it surfaces those high engagement framings to operators producing parallel content. A left-coded account writing about a target sees the right-coded version of the same frame at the top of its own search results within hours of the right-coded version being published. The reverse is also true. Each side's algorithmic feed is, structurally, partly the other side's content.
Third, the algorithm rewards whoever publishes the sharpest version of the frame next, regardless of which side they sit on. The blue vector, having seen a high engagement framing in its environment, has an incentive to publish a parallel frame within hours, because matching the sharpness is the only way to compete for the same engagement pool. The reverse pressure operates on the red vector.
No meeting occurred, no instruction was given, no payment was made. The frame nonetheless converged.
That is convergence. 2 enemies, 1 narrative, 4 hours. The algorithm did the coordinating. No human had to.
A reasonable viewer asks, was there coordination?
The honest legal answer is no. There was no coordination in any sense any prosecutor, any election regulator, any platform, trust and safety officer, or any congressional investigator could establish. There was no message. There was no payment. There was no shared employee. There was no phone log. There was no account linking signal that would survive forensic review. There was, in the legal sense in which coordination is currently defined, nothing.
The legal answer is true. The legal answer is also useless. The effect. The regulatory framework was designed to detect the production, by independent actors, of a coherent narrative against a single target on a single timeline was achieved without triggering any of the framework's tripwires.
The framework was built in an era when producing that effect required coordination. Producing it without coordination was not technically possible. The framework therefore treats coordination as the necessary signature of the effect.
The algorithm has decoupled the effect from the signature. The tools were built to detect coordination because coordination was the only way the effect could be produced. The algorithm produces the effect without the coordination. The tools therefore detect nothing.
The legal answer, there was no coordination, is correct, and the harm is real.
Convergence is older than the algorithm. The algorithm did not invent it. The algorithm accelerated it.
In the era of paper newspapers, through roughly 1990, the New York Times' above-the-fold front-page placement of a story functioned as a convergence engine. When the Times put a story above the fold, every regional newspaper in America saw the placement on its overnight wire service feed and faced the same incentive structure today's algorithm creates. To match the framing was to compete for the same readership. Within 24 hours, the framing the Times had chosen, the specific noun, the specific verb, the specific arrangement of the leadee, appeared in paraphrase in roughly 200 American newspapers. No editor in Topeka had called any editor in Atlanta. The framing nonetheless converged.
In the era of cable news, through roughly 2010, the convergence window narrowed from 24 hours to 12. When the major cable networks both ran the same on-screen banner phrase within the same hour, the Sunday political shows would, by Saturday afternoon's tape, have adopted that phrase as the lens through which the week's politics were discussed.
The algorithm narrowed the window from 12 hours to 4. The mechanism is the same, the actors are different. The window is shorter. The reach is larger. Today's algorithm runs the convergence engine that the wire service ran in 1965 and the cable banner ran in 2005.
The viewer who understands this lineage is the viewer for whom the March 2026 event ceases to be confusing. There is no need to find the meeting between the blue vector and the red vector, because the meeting has never been the mechanism. The meeting has always been a metaphor for the structural pressure each independent actor was responding to. The pressure is real. The meeting is fictional. The frame converges either way.
Module 11 is the first information architecture module in this series. The citizen action move on Module 11 is structurally different from the moves on Modules 3 through 10. The earlier modules train the citizen to read documents. Module 11 trains the citizen to read their own feed.
The audit takes 15 minutes. The product is screenshot-grade evidence of a convergence event the viewer has identified themselves, on their own feed, on a target of their own choosing, using nothing but public platform tools and a phone clock.
Step 1. Pick a phrase. From the last week of your own feed, pick a single phrase, 3 to 8 words long, that you remember encountering more than twice. The phrase should be specific enough that random people would not write it the same way by accident.
Step 2. Search the phrase in quotation marks. On whichever platform the phrase first appeared on, paste the phrase in quotes into the search bar. Use the platform's advanced search to set a 48-hour window centered on the date you remember first seeing it.
Step 3. Sort the results from oldest to newest. Click the earliest matching account. Make a behavioral judgment about its political coding. Left of center, right of center, or neither. Note the timestamp in the follow account.
Step 4. Walk forward through the search results, one account at a time. Note the timestamp, the political coding, and the follower count for each.
Step 5. Look for the cross-spectrum jump, the defining marker of convergence, as opposed to ordinary in-cluster amplification, is the moment a phrase that started in one political cluster appears in identical form inside the opposing cluster within 24 hours. If you see the same phrase used by both a left-coded account and a right-coded account inside that window, you have detected a convergence event. Take screenshots of both posts. Make sure the timestamps are visible.
That is the audit. 15 minutes, 2 screenshots, a timeline. The structural observation that two political clusters that publicly hate each other produce the same framing on the same target on the same day without coordination.
The viewer who runs this audit once becomes the kind of reader an information operation cannot quietly metabolize. The next time a phrase moves through their feed, the viewer will instinctively search the phrase, sort by date, and check the political coding of the earliest publishers. The audit becomes a reflex. The reflex becomes a literacy. The literacy becomes the only thing the algorithm cannot root around.
Modules 3 through 10 mapped 8 financial moves. Modules 11 through 15 will map 5 information moves. Together, they describe the architecture in which a citizen in 2026 lives.
The financial architecture hides money. The donor's name disappears at the DAF layer. The legal path of the money is distributed across 501c3, C4, and 527 layers. The destination operates inside a fiscal sponsor's wrapper. The origin can be foreign without triggering FARA. The ultimate ownership is shielded by Delaware corporate anonymity. The activity is classified as educational. The operators are the same 50 people across 300 entities. The final layer, Schedule B, is statutorily redacted.
The information architecture attacks privacy. Independent actors converge on identical frames without coordination. Content supply clusters ship prefabricated framings into the feeds of millions. Replacement labels make group attacks legally permissible without naming individuals. Synchronized posting produces the effect of coordination from genuinely independent operators. Persona layering allows one operator to function as many across the platform's recommendation graph.
Each move in each layer has its own defense. Each defense is reasonable in isolation. In combination, the two layers produce an architecture in which the donor, the vehicle, the destination, the mechanism, the classification, the operators, and the ultimate identity and reputation of any person inside the architecture can all be made structurally invisible or structurally indelible at the discretion of whoever is operating the layer above the citizen.
The citizen is the layer above which everything is hidden. The citizen is also the layer at which everything is targeted. The vault protects the citizen from one direction. The pylon attacks the citizen from another. The two architectures are not in conflict. They are the two halves of the same machine, viewed from opposing constitutional angles.
The First Amendment closed the door against the state. The algorithm opened a window through which a different party climbs in.
Module 12, Outsourced Content, the Supply Chain, opens next week.
The Shadow Patriots do not expose. We map. We name the mechanism, never the actor. We write so that the citizen can step outside every information operation they are currently inside and see from outside the architecture they were being metabolized by. The citizen who can see the architecture is the citizen the information operations system cannot touch. That citizen is the outcome of this series. Every module, every song, every brief, every card is calibrated to produce that citizen.
If Module 11 named convergence as a phenomenon, Module 12 names the infrastructure that prepositions the frames before they are needed. Account clusters that ship prefabricated content on a daily tempo, drawing from a shared inventory of framings, available for any operator to pick up and post without writing it themselves. Module 11 shows what convergence is. Module 12 shows where the convergence frames come from.
2 rooms.
No door.
1 voice.
You just heard the voice. Module 12 walks you through the rooms.
For Project Milk Carton, 501c3, EIN 33, 1323547, in the Shadow Patriots Civic Investigations Desk, I'm Brian Walker.
And I'm Sarah Reyes. The vault is closed. The pylon is open. The citizen with a phone is the only thing the mechanism cannot root around. Stay with the doubleness as it lands. Good night.
It was a weekday in early 2026. A 47,000 follower account, coded inside one political cluster, published a post at 9:14 in the morning. A 112,000 follower account, coded inside the same cluster, published at 10:02. A 98,000 follower account, coded inside the same cluster, published at 10:41. 3 posts, 90 minutes. Same target, same noun, same adjective, same structural argument.
A reader scrolling through any one of the 3 posts would have read it as the operator's voice. A reader who saw all 3 within an hour would have noticed the cadence and dismissed it as in-cluster amplification. The way a political cluster repeats itself, the way a flock of birds turns in formation. The cosmetic variations were exactly what you would expect if 3 writers were handed the same outline and told, make it your own. Make it your own.
Because that is what happened. The 3 operators did not write what they posted. The content existed before any of them logged in. Module 12 is about the supply chain that produced it.
Module 11 named what happens after the operator publishes, the algorithm distributes, the cross-spectrum jump occurs, convergence happens. Module 12 names what happens before the operator publishes. The question Module 11 left open, where did the words come from before the accounts typed them?
A content supply chain has 4 layers. Writer layer, content producers on contract, name not on the published post. Editorial layer, voice and brand fit, producing cosmetic variants for each operator. Distribution layer, routing variants to operators by reach and audience match. Operator layer, publishes under their own name and voice. The audience reads the operator as the speaker.
None of this is illegal. None of it is new. PR firms have done it for a century. Op-ed syndicates have shipped pre-written commentary to subscribing newspapers since 1915. Advocacy groups have published ready-to-print template letters since the 1960s. Campaign messaging shops have produced surrogate talking point packets every cycle since 1980. Trade association media kits ship templated press releases every quarter.
The supply chain is older than the platform. The platform reduced its friction from days or weeks to minutes or hours, narrowed the publication window from quarterly or weekly to daily, and removed the editorial gatekeepers, the newspaper editor, the broadcast producer, the magazine editor-in-chief, who used to read what arrived in the mail before it ran. The structure stayed.
The supply chain runs on money. The 8 financial moves the reader walked across modules 3 through 10 apply to this floor as cleanly as they applied to designation systems in module 11. Donor anonymized at the donor-advised fund, distributed across CE3, CE4, and 527 layers. Destination operates inside a fiscal sponsor wrapper. Activity classified as educational. Donor list at the CEE3 is statutorily redacted under Section 6104, paragraph D3A.
The Schedule B vault that protects the donor in Module 10 is the same vault that funded the designation system in Module 11 and the same vault that funds the supply chain in Module 12. One vault, 3 layers of output. The financial architecture is one. The information architecture has multiple subfloors.
The pattern is documentable. 3 to 7 accounts. Combined reach in the low 6 figures to the mid 7 figures. Posting cadence is daily. Content overlap, measured by phrase match across published posts within a 48-hour window, is high enough that random independent authorship is statistically implausible. Producer of record on the published content is unattributable from public-facing material. Funding source is unattributable from public-facing material.
Editorial layer evidence is structural. Synonym swaps cluster within a small recurring word set, 3 to 5 words substituted across the variants. Photo selection draws from a shared inventory. Opening rhetorical moves cluster within the cluster, but diverge from any random sample of comparable reach independent accounts.
Prefabrication is not coordination. The writer is not coordinating with the operator. The writer is producing content. The operator is not coordinating with the writer. The operator is purchasing or receiving content. Both can act in good faith with no contact between them, and the supply chain still functions. The framework was built to detect coordination as the signature of effect. The architecture has decoupled the signature from the effect.
Module 12 trains you to see prefabrication on your own feed using a quote search in a 15-minute audit. Pick a phrase you noticed 3 times this week. Search it in quotation marks on the platform where you first saw it. Sort by date. Look for 3 or more posts within the same political cluster, posted within 90 minutes of each other, all containing the exact phrase.
Then audit what is different between them. The synonym swaps, the photo selections, the opening rhetorical moves. If the variation clusters within a small set, 3 to 5 words substituted, photos from a shared inventory, openings drawn from a small structural set, you are looking at editorial variation, not independent authorship. The narrowness of the variation is the editorial layer signature.
Click through to each operator's bio. Look for a named producer of record, a media company, a content collective, a parent organization. If the producer is named, the cluster is operating with the supply chain disclosed. If the producer is not named, you have the structural pattern of an unattributed supply chain. The opacity is the signature.
Take 4 screenshots, the earliest post in the cluster, 2 cosmetic variation matches, and 1 bio with the producer of record visible or absent. You now have a documented map of prefabrication on a target you chose, sourced through nothing but a public platform's search bar.
The architecture is now 4 layers wide. Layer 1 the financial architecture, hiding money. Layer 2, the designation architecture, producing categorical verdicts. Layer 3, the supply chain, prefabricating frames. Layer 4, the algorithm, distributing the frames at scale. Each layer has its own defense in isolation. In combination, the 4 layers produce an architecture in which everything between the donor and the citizen has been made structurally invisible, except the operator, who is the only visible link the architecture has left.
The citizen is the layer above which everything is hidden. The citizen is also the layer at which everything is targeted. The vault protects the citizen from one direction. The pylon attacks the citizen from another. The supply chain feeds the pylon from upstream. The algorithm distributes the pylon at scale. 4 architectures, 1 machine, 1 citizen at the bottom of it.
Shadow Patriots does not expose. We map. We name the mechanism, never the actor. The frame did not appear when the operator typed it. The frame was already on the rack. The operator picked it. The cluster wore it. The algorithm distributed it. The citizen who can see the rack is no longer governable by what comes off it. That citizen is the only product Module 12 is building.
Module 13, Replacement Labels and Dehumanization, opens next. Module 11, named Convergence. Module 12, named the supply chain that prefabricates the frames that converge. Module 13 names what happens to the target's category once it enters the architecture. Same series, same architecture. 1 floor deeper.
The detailed citizen action card lives at projectmilkcarton.org/shadowpatriots. The full Module 12 article walks the architecture in 10 parts. The supply chain is older than the platform. The platform reduced the friction. The architecture stays.
3 accounts, 90 minutes, 1 frame, 3 voices, you just walk the rooms.
Project Milk Carton.
Shadow Patriots.
Module 12.
Off the rack.
Assigns a frame at 3, editor brands it. Voice fit, voice fit, voice fit. Distribution routes it by reach, by audience, by match. Operator picks it up, operator hits publish, audience reads the operator as the speaker. The frame was on the rack at 3, the keystroke was at 308. The keystroke is not the writing, the writing was at 3.
Same writer, different voice. Same frame,
3 operators,
90 minutes.
3 keystrokes,
1 sentence.
1 sentence on the rack. Off the rack. Off the rack.
3 voices, same frame. Off the rack.
Off the rack. Off the rack.
3 voices, same frame. Off the rack.
Donor at the gateway, name disappears. Daft to the educational classification, fiscal sponsor, project on payroll, writer on contract, name not on the post, editor brand designs of variants, synonyms, photos, opens distribution to the cluster.
3 operators.
Voice match, operator hits publish under their own name. Audience reads the operator. Operator is the only thing the architecture left to see.
Same writer, different voice. Same frame.
3 operators,
90 minutes.
3 keystrokes.
1 sentence.
1 sentence on the rack. Off the rack. Off the rack.
3 voices, same frame. Off the rack.
Off the rack. Off the rack.
3 voices, same frame. Off the rack.
King features 1915. Letters to the editor 1960. Talking point packets
1980 astroturf.
1990.
Algorithm.
2026.
The supply chain is older than the platform. The platform reduced the friction. The platform narrowed the window. The platform removed the editor. The supply chain stayed. Layer 1, the money. Layer 2, the designation. Layer 3, the supply chain. Layer 4, the algorithm. 4 layers.
1 machine.
1 citizen at the bottom.
Off the rack.
3 voices, same frame. Off the rack.
Off the rack.
3 voices, same frame. Off the rack.
The shift ends.
The frame is wrapped. The frame is packaged. The frame is shipped.
Ship, 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 ship.
A note before we begin. Module 13 describes a real mechanism, the replacement label that recategorizes a target in the public's vocabulary across a 60-day cascade.
This broadcast will not name a single replacement label, not in quotation marks, not in a footnote, not as an example.
The label is the information operations payload. Reproducing the label inside an analytical critique refires it for the operator. We map the technique. The labels stay sealed.
By the end of this broadcast, you will know how to find the labels in your own vocabulary. That is the only product Module 13 is building.
Good evening. Tonight, Module 13 of the Shadow Patriot series. The edit. Module 11 named Convergence. What the algorithm produces when one designation lands in 2 opposing rooms within 4 hours. Module 12 named the Supply Chain. The upstream factory that prefabricates frames before any operator hits publish. Module 13 names the specific product the supply chain ships at the vocabulary layer.
A replacement label, a noun that the supply chain produces and substitutes for a person, a group, or a category in the public's vocabulary. The reader does not look the label up. The reader does not vote for the label. The reader inherits the label from the feed and starts using it in conversation.
It is a Sunday afternoon. You are at a family table or a friend's kitchen or a group chat in a context you trust. The conversation lands on a public figure you both know. The other person, your aunt, your coworker, your cousin, describes the figure in a single word.
60 days ago, that same person used 3 sentences to describe the same target. They named what the target did, what the target stood for, and where the target sat in the political landscape. The description was complex. The description was contestable.
Today they use one word. The word is short. The word is loaded. The word is doing the work that 3 sentences used to do. The other person did not look the word up. The other person did not vote for the word. The other person is using the word the way a person uses a language they grew up speaking.
The word came from somewhere. That somewhere is a documented cascade, a single high-reach origin, a 60-day propagation window, an adopter list of 17 accounts or more, and an editorial layer that wrote the word before any of the adopters published it.
Module 13 is built to ask one question, not, is the new label fair? That is the trap. Arguing about whether the label is fair forces you to use the label, which propagates the label, which is exactly the work this producing organization wants you to perform. The question is upstream of the argument. Who replaced the noun?
A replacement label operation has 4 stages. Each stage is a documentable public record step. Stage 1, targeting. A target is selected whose existing description is too sympathetic, too neutral, or too complex. The replacement label's job is to collapse the complexity.
Stage 2, selection. The label is chosen, not coined. Length, 1 or 2 words. 3 at most. Emotional valence, preloaded with negative association, existing semantic field. The label sounds like a word the reader already knows. Substitutability. The label can grammatically replace the target's existing category noun.
Stage 3, amplification. A single high-reach origin publishes the label first. Within 7 days, 5 to 10 secondary operators in the same political cluster have adopted it. Within 21 days, the label appears in cluster internal headlines. Within 45 days, cross-spectrum operators have begun using it. Within 60 days, the label has crossed into mainstream casual conversation.
Stage 4, saturation. By day 60 to 90, headlines drop the quotation marks around the label. Cross-spectrum reaction posts adopt the label even when they argue against it. The target's own response uses the label. The label is now the noun. There is no longer a competing description.
A replacement label operation runs on money. The 8 financial moves the reader walked across modules 3 through 10 apply to this floor as cleanly as they applied to designation systems in Module 11 and the supply chain in Module 12. Donor anonymized at the Donor Advised Fund, distributed across CEE3, CE4, and 527 layers. Destination operates inside a fiscal sponsor wrapper. Activity classified as educational under categories like language curriculum and communications strategy research. Donor list at the CEE3 is statutorily redacted under Section 6104, paragraph D3A.
The Schedule B vault that protected the donor in Module 10 funded the designation system in Module 11, funded the supply chain in Module 12, and funds the replacement label operation in Module 13. Same vault, same opacity, new product class. The donor is anonymous. The researcher is invisible. The operator is the only visible link. The audience reads the operator using the label.
A documentable cascade, structurally, single high-reach origin, reach in the 7 to 8 figures range, cascade window of 60 days, adopter pattern of 17 or more accounts, combined adopter reach in the high 7 figures to low 8 figures, substitution rate exceeding 40% of cluster internal posts by day 60, exceeding 70% by day 90, exceeding 85% by day 180.
The structural marker that distinguishes a documented cascade from organic linguistic drift is the cross-spectrum jump. The moment the label first appears in an opposing cluster operator between days 14 and 45 of the cascade, drift does not cross the spectrum on that window. Cascades do.
Description is journalism, a candidate who endorses a policy, a public figure with a record, a group that advocates for a position. Description preserves the target as a complex entity the reader can evaluate. Substitution is something else. The replacement label removes the target's complexity and installs a single noun the reader uses without thinking. The reader has not gained information. The reader has been issued vocabulary.
The framework that polices defamation requires false statements of fact. New York Times versus Sullivan, 1964. The doctrine. Replacement labels do not assert facts. They reassign categories. The framework finds nothing. The harm proceeds. Same legal tripwire failure. Modules 11 and 12 named, viewed at the vocabulary level.
The technique is older than the platform. Roman hostis doctrine, the formal designation that converted a citizen into an enemy of the state, removing legal protections. 18th century American pamphleteering, Federalists and Republicans coined replacement labels for each other in the founding era. The labels survive in textbooks. 20th century authoritarian state propaganda regimes, multiple regimes produced label dictionaries assigned to ethnic and political categories of citizens. Cable news era, 2-word epithets repeated across opposing networks toward the same target across the same news cycle.
Algorithm era. The platform reduced the cascade window from weeks to 60 days. The supply chain added the editorial layer that produces the cosmetic variations. The recommendation algorithm rewards each adopter for using the label. The mechanism is the same, the window is shorter, the reach is larger. The legal framework has not been updated.
Module 13's citizen action move is the replacement label trace audit. 15 minutes. Public tools. Your own feed. Catch yourself the next time you describe a public figure with a single word, especially a word that strikes you as oddly specific, oddly familiar, or oddly emotionally loaded. Quote, search the label on the platform you saw it on. Sort by date. Find the earliest matching post. Walk forward through the adopter cascade. Note the cross-spectrum jump.
Take screenshots of 3 points: the origin, the cross-spectrum jump, and the first headline that uses the label without quotation marks. Save them privately. Do not amplify the audit by sharing the screenshots widely. The audit is for the reader. The audit produces literacy, not content.
The architecture remains 4 layers wide. Module 13 is not a 5th layer. Replacement labels are a propagation mechanism that uses all 4 existing layers. Layer 1, financial, funds the writers, editors, distribution layer staff, and contracted researchers. Layer 2, designation, gives the producing organization categorical authority. Layer 3, supply chain, routes the label across operators with the right reach. Layer 4, algorithm, rewards each adopter for using the label by surfacing their content.
A replacement label is what the 4 layers produce when they run end-to-end at the vocabulary level. The label is the product. The 4-layer architecture is the factory. The reader's mouth is the destination.
Shadow Patriots does not expose. We map. We name the mechanism, never the actor. The label did not appear in your vocabulary by accident. The label was edited in. The reader who can see the edit is no longer governable by what the edit installed. That reader is the only product Module 13 is building.
Module 14, synchronized posting without coordination, opens next. Module 11, named convergence. Module 12, named the supply chain. Module 13, named the labels the supply chain ships. Module 14 names the cadence at which independent operators post the labels in formation, producing the coordination effect from non-coordinating actors.
The detailed citizen action card lives at projectmilkcarton.org. The full Module 13 article walks the operation in 10 parts. The technique is older than the platform. The platform reduced the friction. The architecture stays.
A single Sunday afternoon. A single word from a person you trust. 60 days of cascade upstream of that moment. You just walk the operation. Project Milk Carton.
Shadow Patriots.
Module 13.
The edit.
Sunday. 3 months ago you used 3 sentences. Tonight you used 1 word. The word is short. The word is loaded. The word was not in the room before. You did not write the word. You did not look the word up. You inherited the word from a feed. The word is the description now. The description is closed. The argument is over. The argument was never about the target. The argument was about the noun. The noun has been replaced. The replacement was the work. The work has been performed. Edit, 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 edit. The noun was replaced. Edit, 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 edit. A single origin published the word, reaching the millions day 0. 5 adopters by day 7. 12 adopters by day vocabulary. The argument is over. The argument was never about the target. The argument was about the noun. The noun has been replaced. The replacement was the work. The work has been performed.